Hey y'all. You know, I can't keep up with going live. But I'm here today trying to do it because there'd be a lot of information I want to talk about that I can't even get out because I be just going all day long, and then I don't feel like doing no live. All right, so being that we're getting ready to come up on the in-person taxpreneur due diligence boot camp, that's just one event. But I think it's important that we stay educated regardless if we attend the event or not in reference to due diligence. We need to bring more awareness to it. This week, last week, people are still going through due diligence examinations. People are still getting fined. And I think, and I feel rather, that something's not clicking when it comes to people really understanding what the IRS, what is that? What the IRS is looking for when it comes to due diligence. What's that? My lip might be chopped. What the IRS is looking for when it comes to due diligence. And so today I want to talk about like 4 things that you should kind of understand about due diligence. I think that's a cut. It hurt. Um, what you should understand about due diligence and actually being compliant. And what I feel like a lot of tax pros are really, really, really confused about, or too many don't understand what is necessary to be compliant. So, one thing is what a client file is and actually having a client file. I feel like it's too many tax pros have their client information everywhere. And when the IRS decides to come do an examination, you're scrambling trying to get the information up for each client because you have it everywhere. You don't have a system in place to collect it. You're inputting the client's information from texts, inboxes, emails that they've sent, and then you're not storing the information anywhere, meaning you're not printing it out, you're not downloading it, putting it in a digital file. You're just inputting the information, and you might even ask the questions, but you just inputting the information and then you're submitting the return. And that's especially true for my tax pros who have high volumes of clients, because if you have a lot of clients coming in, you want to try to get them out as soon as possible. And so you're taking the information from everywhere and you're not putting it in one place, which I call it the client file. Like every client should have a file. And there's too many tax pros who clients do not have a file. So that's one thing that is messing a lot of people up. The next thing is you're only relying on Form 8867 to store your notes, meaning you don't have the questions that you asked the clients, the answers that they gave. You don't have additional inquiries. You don't have anything stored anywhere but on the Form 8867 on those 4 or 5 lines. That's all the information that you have to show the IRS about your client. Now, I'm not going to go in a long spiel about line 5 of the 8867 because I teach it in my classes. I will be I'll be just talking in reference to it. But at the end of the day, a lot of people think if they put their notes or put some notes on Form 8867 line 5, then they're compliant, especially when they say their software requires them to put it there. When you're dealing with a client file, it's several questions that you have to ask your client in reference to them qualifying for the credit. Or in addition to asking the questions, you might have documentation that answer the questions that you need to make notes of. And a lot of you are just relying on line 5 of the 8867 as you being compliant. I hear a lot of times, and a lot of people asking the question where else do I put it in a client file? You can ask questions and take notes on a document, an intake form, and you can do it on digitally. It's so many different ways that you can put your information to make sure that you qualify as your client. And it's not really all about making sure you qualify as your client. It's more so of showing that you qualify as your clients. Because ultimately, you can tell the IRS all day long that, you ask them specific questions, that, and certain information. But if you're not showing them in your client file that your client qualified for those credits in HOH, then you're not in compliance. You're just not in compliance, which ultimately is what leads to so many people getting fined. So don't just rely on that Form 8867. The Form 8867 is a requirement to be compliant for due diligence. It's one of the 4 pillars, right? But not only that, it is more details that have to go into it outside of the 8867. And I think a lot of tax pros think if they put notes on the 8867 on line 5, that that's for some reason going to keep them from going through an examination. The IRS is not even looking at that. They're not going to look at your notes, your form, unless you are selected for an examination. So, too many of you relying online on the 8867 for your notes. The third thing is your questions and answers are not documented. In the IRS eyes, if it's not written, it did not happen. A lot of you think that you do not have to show the questions you ask and document the answers. You think it's okay to just paraphrase in a note format. A lot of times when you're just doing it in a paragraph story format, you're missing details of the actual qualifications of your client qualifying for whatever credits they got. So I always recommend don't just write notes. Don't just write a page full of a story, because every client is different. So did you cover every aspect of the qualifications for your client to qualify? It's certain things that your client have to be to qualify for EITC or do or have. It's certain things that your clients have to check off to be qualified for HOH. It's certain things your client has to check off in order for them to qualify for the American Opportunity Credit. So did your client check off on those particular tests? They're called tests, but did they check off on those particular tests? Did they? Did they not? And if they did, how are you showing it? And I think that's another reason why a lot of people get fined, because you don't have the information the way it needs to be. When you just write a story, if you get a good IRS agent, they'll find so many holes in that story, which leads to my 4th thing, which is it's a difference between asking questions and your client's answers and then making additional inquiries, right? Now, additional inquiries, you still got to ask questions and you still have to document the answers. But your initial question and answering is about the qualifications initially. The additional inquiries is your questions and your answers that are required based off of how your client answered the initial questions and the documentations that they have in a file to qualify. And when we say documentation, a lot of people say, well, we're not required to have documents. You're not required to have supporting documents. meaning you're not required to have leases and utility bills and daycare records and all those different things. You're not required to have those, but you are required to have certain documents. You have to show how did you come up with this income that you have on these tax returns. So that means you have to have your income documents. You have to have an ID. You got to verify the client. So it's certain things that you have to have in your client file that's considered a document. Then your client can give you supporting documents. Because even though it's not mandatory, you can always ask for those supporting documents, or your clients can voluntarily give you the supporting documents. Now, based off those supporting documents, did you ask additional inquiries? Did you review the documents? And did you have any questions that you needed to ask based off what your clients initially answered when you did your qualifying questions and when your clients gave you whatever documents they gave you? Was there anything you needed to ask additionally that you did not ask and that you needed to document? Additional inquiries is a key component to being compliant. If you go read your Form 8867, you read the publication on due diligence. If you was to read the prepare a penalty sheet that the IRS utilizes when they find tax pros, you're going to always see the words, two words, additional inquiries. That means that they're looking for that. They're looking for where are your additional inquiries to what you was provided. Then a lot of people feel like if you only have supporting documents, then you're compliant. I can be rich off how many tax pros that I have talked to, and when I ask them, what do you have in your client's file, or what makes you think that you're actually compliant, and the first thing come out their mouth is, well, because I collect birth certificates and I collect social security cards. I got this birth certificate, I got these social security cards. They're thinking, boom, I'm compliant. They thinking, boom, I don't have anything to worry about. And boom, that get a lot of people fined. That get a lot of people fined. Because unfortunately, out of all these years, when you talk about people training tax pros, they ultimately think that when you train them, you got to train them on making sure they collect documents to have a complete file. Now, you should take and collect documents from your clients. Why? Because you want to file the most accurate return possible. And how you're able to file the most accurate return possible is by collecting certain documents, right? But again, that's the thing that people think that they can rely on to make sure that they're compliant. Because as long as they got birth certificate, as long as they got a lease, as long as they got social security cards, we think our file good. We don't think we gotta have anything else. And unfortunately, what ends up happening, you go through the examination and you end up being fined, and you're lost, because the next thing I hear people say is, well, I had the birth certificates, I had the social security cards, I had a lease, I had all these things. Hey, girl, the tax officer. I'm trying to call your real name. The tax officer. Hey, girl. Good morning. But they're just automatically thinking they're compliant. And the reason why you're thinking you're compliant and you're thinking you should not be fined is because you had the documents. That's the only thing when people are teaching due diligence, tax pros are teaching due diligence, that's the only thing I hear them drilling in your head. And a lot of times the supporting documents gonna get you in trouble because you ain't reviewing them. You're just excited that you collected them. So due diligence is a lot Don't let nobody tell you it's not. Okay? It's a lot to it. It's a lot required on our part as tax pros to make sure that we are in compliance. And if you don't want to receive thousands of dollars of fines, then you need to make sure that you're learning the proper way to make sure that your client files are together. What people don't know is that if you've never been through an examination, you hear the stories that people are getting thousands of dollars of fines, but understand people are really getting fined crazy amounts of money. 30, 32, 38, 40, 42. I talked to somebody last night. They about to fight doing appeals. They want to do appeals on a fine. $46,000 in fines. Yes, $46,000 in fines. Again, I've seen people get 60 some, $80,000 in fines. This is not nothing that is made up. Okay, this is really going on, and this is why I spend a lot of my day and I put out a lot of content around this particular subject. People probably, especially if you're new to my page, probably wonder why I am so passionate about due diligence and why do I talk about it so much. Especially when, of course, I do taxes. I'm a tax preparer and I'm a coach and I have knowledge in a lot of things. But why do I talk about due diligence so much? Why have I created products around teaching people about due diligence? Why am I hosting the Taxpreneur Due Diligence Bootcamp? Why am I doing all those things? I am doing it because it's literally a problem in our industry that's getting bigger and bigger, and it's affecting more and more people. And then a lot of times, I want to say innocent people, right? People who just don't know no better, that just have not been exposed to other tax pros or the information as a whole. Some people jump into the tax industry and they start doing taxes based off the fact that their family members needed somebody to do their taxes. And then they decide, okay, it's some money to be made in this industry. And because people can do their taxes on their own, when you become a professional tax professional, your rules and guidelines is not the same as somebody who do their taxes on their own. You're held at a higher standard. And not only that, that higher standard can cost you a lot of money. When I first started doing taxes, this was not an issue, right? We could be responsible for our clients' returns, but we wasn't faced with all these fines, potential fines, and accountable for what people do on their taxes. Like, we wasn't held at that standard. We had to follow guidelines, you know. We had to make sure we followed the rules, but we didn't have to worry about having to go through these types of examinations and then be scared that we're going to be stuck with a bill. This has only been in existence since 2012, really. The law came into place December 31st, 2011, and then it started taking place in 2012. So it's only been in place for like 14 years. And a lot of people, again, is not aware of it. If you're not around other tax pros that prepare taxes, you don't talk to them, you're not aware of what your obligation is. The IRS, they do tell you these things. They do send out letters. They do those types of things, but it's not talked about enough. It just started getting talked about like it is now, like the last 3 years. To be honest with you, the last 3-4 years. People would have classes about it, but people were afraid to talk about it because it had this stigma on it that you was doing something wrong if you got selected for an examination. And it still has a stigma on it. I run ads right now about it, around it. And because I say me and my team been through it 8 times, it's automatically, oh, they doing something wrong. And I be like, are y'all slow? Are y'all really slow? Because if we was doing something wrong and we went through it 8 times and they got to come in our office, look at our files, go through our stuff, they would have got us by now. 8 times? If we was doing something wrong, we would have been got by now. Not only that, we would have been had to pay some money back. We would have been left with a bill if we was doing something wrong. And so it's a stigma on that. You know, it's a stigma if you go through it. So what has happened is people have been dealing with it for years, and they was keeping their mouths closed because they didn't want people to think that they was in that thing of being crooked. And I'm gonna tell you, we was the same way. You know, we was the same way. Even though we didn't understand it until we started going through it a whole lot of times and, you know, learning more and more about it. And then I studied it to a T, for real, for real. Even though I passed it, I still study it. I study it for changes. I study it to make sure like they come back again, that we passed it. So, and the more and more and more I studied, the more and more I realized, like, okay, this is something we can't get out of. This is something, if you're a tax pro and you're filing these types of returns and you have a high volume for real, you're going to have to go through. These are, if you do these types of clients, that they are really going to send out letters as far as outreach wise. These are things that they are required to do, not just the examination, but the outreach part. That means to send the letters, to do the webinars, to do the knock and talk where they come to your office and educate you. They're required to do that, to teach you about it. So this is something that if we're going to stay in the tax industry, we're going to have to really be educated on it. And as I start talking to more and more people and realizing like, oh, okay, we rare. Okay. We the only ones around here passing it. And it's so many people failing it. That's when God was like, girl, go teach it. You know, and who knew that the thing that drove me insane, made me want to get out the industry, made me not want to do taxes no more, would be the thing that would help, say, other tax pros. So I talk about it, and I won't stop talking about it, because I am on a godly assignment, for one. But number two, if I can save a tax pro from getting thousands of dollars in fines by the education I'm providing, whether it's free or whether they have to pay for it, then why not? And to make people feel better. Because what most people don't understand is when somebody get a letter from the IRS saying that they can come in their office, or, you know, they got to review their client files, people be losing weight. People be so stressed out. They can't eat. You know what I'm saying? They can't sleep because they be scared. They just be scared. And then if you listen to other people who ain't never been through it, right? Or these holier than thou people, they don't even prepare low income clients, then that put extra stress on them. And so my goal is to teach it, but my goal is not just to teach it. My goal is to help other people deal with it. I had to tell somebody recently, like, they got fined. They're going to do an appeals. And I had to tell them, I know it's stressful, but guess what? It's a learning experience. You can't be mad at what you didn't know. And you can't be mad at what you wasn't educated on. Only thing you can do now is learn from the experience and try it over again. That's all you can do. Tighten up your systems. Tighten up how you supposed to be compliant. Learn more about the information to make you compliant. And boom, continue on building your business. Other people gonna tell you to shut down. Other people gonna scare you to death. Other people gonna make you feel bad because you went through it. And the sad part about it is it's an industry standard, an industry thing. Period. I'm here to be like, it is what it is. Nobody wants to go through it. For real, for real. But it is what it is. And you can get on the other side of it, even if you do get fined. But you also can get on the other side of it because you don't have to be fined. Long as you learning what is required to be compliant. And you need to learn it from somebody who knows how to be compliant. Because there's a lot of noise out here. And some of these people are going to teach you right into getting fined. Now, the tickets for the Taxpreneur Bootcamp is almost sold out. Literally. Thank you, God. You know, it's almost sold out. And if you are a person who possibly received a due diligence outreach letter, you actually went through the webinar the IRS gave at the beginning of the year, and you was, required, not necessarily required, but they told you need to be on the webinar. You went through a knock and talk with the IRS. You have went through an examination and you was fine. Regardless if you had somebody represent you or you went through it yourself, you still was fined. You need to be at this boot camp. Okay, good morning, Bernadette. You need to be at this boot camp if you can, right? Because you want to learn what it really takes to be compliant. You want to hear from other people of their experiences. So when you go through it, now you're going to remember, oh, you know what? I was at that event and I remember that person saying this. You want to get the information that's provided to you. The IRS do provide information for free. They do. But I can tell you this, the information that they're providing for free is not the information that's going to make you compliant. Because what I need everybody to realize is they put due diligence in place to make money. That's why it's in place, for them to make money. And the IRS is a big business. Okay? Those fines are big fines. They found a way to get a lot of money out of a lot of people without teaching them exactly what they want. So if we wasn't out here telling people, because we've been through them, what they're looking for, we all will be fine. So if you can make it, we got a few tickets left. Get in the building. May the 30th, May the 31st. When I get off the live, I'll put the link in the comments. Or you can inbox me for the link. Whatever you want to do. Get in the building if you can. Okay? My phone just going off. Get in the building if you can. Okay? So that way you're there. But the boot camp is not just about compliance. It's about marketing as well. I was intentional about this boot camp. I wanted it to be about people learning how to keep their money and people learning how to make some money. So I was real intentional about what I wanted this training to be about and what I wanted the attendees to learn. And then I went a little further because I also realized the gap over the last couple of months of how many tax pros do not know how to protect their clients when they get audited. Okay? So when your clients get audited, a lot of people don't know what's required, what documents their clients have to turn in, what the IRS is looking for. Then if your clients get a balance, Nobody don't know like how to help them get out the balance or get the balance reduced, or like what the IRS is looking for, or how the levies work. It's, that knowledge wasn't there. That's a problem we have in the industry too. I'm not trying to tackle that one, but somebody do. And so I brought a panel of ladies who are experts in that area to make sure that you're not being compliant for due diligence. It's just due diligence, but you're also learning how to make sure you're able to help your clients in the event that they get audited. If you don't have at least an AFSP, you can't represent your clients. That's okay if you can't represent them. You can, they need help, but you can always help your clients from the back end. You can put all their information together so that they can pass their audit without representing them. So you need to know that information. And so we have a panel at the boot camp for that as well. Now, let me go. I did it. I'm proud of myself. I got up and got on here because I be like, don't want to get up and do it. But I hope, like, if you're just tuning in, you go watch the replay. I mean, if you is watching the replay, drop replay in the comments. Because at the beginning of the video, I talked about 5 reasons why, tax pros or what they need to know in reference to due diligence, really, so that you can be compliant. So I'll talk to y'all later because this phone keep ringing. Bye.